Hey everybody, John Spalsato here from the Arizona Home Group at Keller Williams Sonora Living, and it's time for our June market report. This month we're going to talk about all the price reductions we're seeing all through the MLS. So if you've been watching our market reports over the last couple of months, we've been reporting to you a slowdown in the market that's been coming in our direction. But May was a big turning point. We saw a huge increase in inventory this month, up 102% year over year. But we've also seen the price reductions from the sellers in the MLS up 258% in the last 10 weeks. So that's what we're seeing locally here in Phoenix, but also nationally reporting a little bit of a slowdown as well. So Redfin, one of the largest home search engines out there, they're reporting that the Google searches for real estate for sale is down 10% in the month of May, year over year. Redfin also measures the home buyer demand index, which is what the request is for tours and other services, and that's actually down 9% year over year nationally. And lastly, U.S. lending has dropped at its fastest pace in the last 8 years. So with inflation at the highest it's been in the last 41 years, the Fed is trying to do a balancing act of raising the rates to squash the inflation, but also not to send the country into a recession. So we're all afraid of the Fed raising the rates too much, but there's three components that the Fed has to look at as well that take into consideration. So the first component is personal savings rate. This is disposable income that people have saved, and that's down to 4.4%, which is the lowest it's been since 2008. And this is a red flag because personal spending is a sign of economic growth, and with people spending less, that means that the economy is not growing because of the inflation. So number two is that consumer credit is on the rise. So it was reported in June that there was a $17 billion increase in consumer debt. That is up to over $1 trillion, which were at pre-pandemic levels. This is important because all of this credit card debt is directly tied to the Fed's rate hike activity. So this increase in credit card debt is coming when the Fed is supposed to increase their rates again, which is going to make this debt even more expensive to people. And finally, energy prices are increased. We already know what it looks like at the pump, right? We're seeing $5 gas, but in addition to that, the barrel of oil is over $120, and the Fed has never done a rate hike with a barrel over $100. So if high oil prices in general are forcing a slowdown in spending, then raising the rates are only going to make that even worse. So it's for all of these reasons that we hope that the Fed isn't going to raise the rates all too much this summer. All right, so let's dive in here and finish up with the numbers for the month, and let's take a look at what things are looking like in the MLS. Okay, so I always talk about inventory, right? So we talked about this on my video last week. We were up over 10,000 homes currently on the MLS. This time last year, we were at 5,100. That's up 113% from the second week in June last year. So with the increase of inventory, now we've got a month's supply that's increased. We're up to 1.2 months supply in the Phoenix MLS. That's up from 0.8 last month, and that's a year over year change of 102%. So the second metric is activity. How many homes are going under contract? We're at 9,300 homes. That's down from 11,100 this week last year. So that's down 16.4%. And finally, let's look at closed sales last month. We had 8,856 homes that closed. That was down 13.2% year over year. So where does that put us? So let's just put it all in perspective, okay? So at the end of the day, Phoenix still remains a very hot city as far as market for the rest of the country. People are still moving here in droves, and we're still getting a lot of activity. Yes, inventory is up to over 10,000 homes, but those are just to February 2020 pre-pandemic numbers. And if you go back to February 2019, we had over 18,000 homes available for sale in the MLS. So keeping it in perspective, we've still got a way to go to get back to a fully balanced market. So even though we've been seeing a lot of price reductions in the MLS, we haven't really seen an actual leveling off of pricing yet. As we talked about that being a trailing indicator, we should start to see a little bit of softening as we head into the summer and maybe into the fall. But as of right now, pricing is still holding strong. So the bottom line is if you're a seller and you're on the fence, you're thinking about selling right now is the time to do it before things start to level off on pricing. And if you're a buyer, now's a great time to jump in the market before the Fed raises the rates even more. You've got a lot more homes to choose from today than you did and a lot less competition. So if you guys are looking to buy or sell, don't hesitate to reach out to the Arizona Home Group. Once again, for John, Sharon, Thea, Nadia, and Selene, hope you have a fantastic June, a wonderful Father's Day weekend, and we'll see you in July.